What is going on, investors? Hopefully you guys had a great day out there. Time to talk about Salesforce.com, ticker symbol CRM. Over the last year, stock's up 30%, but we see here it was stuck in kind of a downward channel. And guess what? After reporting Q1 earnings, this thing has broken above that really for the first time in several months. We'll talk about what that means when we get over to the stock chart. Can this make CRM stock a buy? We will talk about that. The other thing we're going to talk about is their Q1 earnings. They came in just moments ago. EPS beat by 33 cents, and they also beat on a revenue. Now, more importantly, one of the things that they often do is they updated us on a revenue guidance and things like that. And we see here, for the full year, revenue went from 25.9. This is guidance. They went from 25.9 billion up to 26 billion. Okay, so just a tiny fraction upward revision, but that is 22% year-over-year growth. In the quarter, they had 23% year-over-year growth to 5.96 billion. Now, for the next quarter, so the quarter that is coming up that they will report here in a few months, they're looking at $6.22 to $6.23 billion. That's 21% growth, and that is over what we just did in the quarter, which was $5.96 billion. So all things being considered, the revenue, the guidance, all that pointing in the right direction. Although you got to realize with the way these companies work is they always kind of leave a little meat on the bone. So when they come out these press releases, they can say, oh yeah, we're going to up full year revenue guidance by, a rounding error, things like that. Same with this Q2 revenue coming in between 6.22 to 6.23. Don't be surprised if it comes in at 6.25 or 6.27, something like that. That allows them to come out with a press release saying, hey, we even beat our guidance. That's what these companies typically do. Now, let's jump over to the statement of operations. We've got our 3 months here. These are the profit and loss numbers. We'll also take a look at the balance sheet. We'll take a look at the cash flows as well if they're in here, and then we'll get over the stock chart. Something super interesting is happening with the stock chart. To be honest with you, I might even be making a trade on this one in the coming days. Let's take a look at this one. So we've got a revenue here on the top line. Left-hand column is the most recent quarter. 2020 was last year. You see here for the total revenues, we went from 4.8 up to that $5.96 billion. That is over $1.1 billion bolted on the revenue side over the last year. That's super strong. Now, we've got other cost of revenues here. They've got subscription support, and they've got these total cost of revenues, super high margin business. Okay. You only spent 1.55 billion to make this 5.9. So you take this 5.9 minus 1.55, you get your gross profit of 4.4 billion. Last year we were sitting at 3.6 billion. So solid growth year over year, not only on that top line, but also the gross profit as well. Now, we've got other expenses here. We've got R&D, marketing and sales, and general administrative. That is where the vast majority of these expenses have come for CRM, and this is why this company hasn't always been wildly profitable. We even see last year, here's our income from operations. This company actually lost $140 million last year during this quarter, but that has swung positive to a positive $354 million. You see, for the quarter, they spent $4 billion on these operating expenses. All in all, they all seem to be trending up, but not exponentially. That has allowed the company to turn a profit in this quarter at $354 million. Now, I have to ask you the question. Okay, this company has a $210 billion valuation. They have $6 billion in sales on this top line. That's for a quarter. And for a quarter, they're making about $350 million, at least in this quarter. And we can probably assume going forward, they'll be in this ballpark. So from a traditional valuation metric, stock seems certainly overvalued, okay? And it could have been creating some pressure on the stock as investors kind of digested this. But For the longer term, as CRM just continues to do a nice job growing their business, it could be that they grow into that evaluation at some point. Now, I want to scoot down here to our balance sheet. So here's our balance sheet. This is cash, debt, things of that nature. You see here cash and cash equivalent and marketable securities. These are both essentially cash. Left-hand column is basically current, up to date. Right-hand column is the end of January. So it's kind of giving you about, a quarterly view here. We got 6.5 billion in marketable securities, another 8.5 in straight cash, another 3.1 in receivables. Receivables went down quite a bit, so they must have converted some of that into sales or in terms of cash from the customers there. So our total assets coming in at about $64 billion. Those ticked down just slightly. Again, I think most of it's coming from this receivables that went from 7.7 at the beginning of the year, right at the beginning of the year, down to 3.1. Now, on the liability side, they have some non-current debt right here, but it's very little, about $2.67 billion. That's not a lot, in my opinion. This is a company, if they needed to take on more debt, which I don't necessarily think they need to do, they certainly could because they have plenty of cash on the balance sheet to service that. Now, how some investors might take a look at Salesforce is really by cash flows, because this net income number, not particularly impressive, okay? You made $470 million in the quarter. Last year, we made $99 million. Now you get to add back in things like depreciation. That's not cash. Other things in here, you get to add back in your accounts receivable, at least the change of that. And you get down here to net cash provided by operating activities. Yeah, for the quarter, it came in at $3.2 billion. Last year, we're sitting at 1.9. All things being considered, things looking pretty good to me. Now, they did invest a little, they did burn through some cash in terms of investing, but some of that goes to these marketable securities, things of that nature. Nothing that I would really be concerned about, and not much coming down here from the financing perspective. So things look good from a cash flow perspective, okay, especially when you factor in that the net income is not particularly impressive for a $200 billion market cap company, but cash flows from the operations do seem very, very promising. And I think investors to a certain degree are valuing the business based on those cash flows, because this company can continue to steadily grow this business. And not only that, they continue to up this guidance and things like that. And this pretty well-run company. Now, what I want to show you here on this stock chart, interesting stuff. So I'm going to put a line in here on our screen at about $235. That's where the stock is trading in the after hours. So we're sitting right here about where my cursor is, and that is above. What I did is I put these downward channels. This thing has been sliding since really like August of last year. It made a high back here at about $283, and it's been making pretty consistently like lower highs, okay? Now, we need to get above 237 on this one, because that's our high here. So I have my cursor right on our previous high. This was back just a couple weeks ago, actually. We made a high at 235, 236, 237, and then we came in here and the channel just stayed intact. So for this to be a reversal of trend, we need to get above 237. We need to not only get above it, but close above it. So if I see CRM, this is happening tomorrow. Today is Thursday. This could happen Friday, could happen Monday. I'm going to monitor this stock. If you can get above 238 on this one, 237, somewhere in there, you've got some room to run. I think you could potentially come in here and retest these highs, which are all the way up to 250, okay? So you've got maybe $10, maybe $12 in upside if you can break this 239 mark. Now, I would set a stop loss here at 229. So you got a $6 stop loss and about $13 upside, $14 upside, maybe even $15 upside, depending on where you grab this one. That is a solid risk reward. Okay, would I want to go long this stock? Not necessarily. Personally, when I look at these financials, I'm more impressed with a Facebook, Apple, Google, Microsoft, they are growing at a clip that is as good or actually better in a lot of cases, okay? We talked about how they grew 23% year over year. Facebook is growing faster than this. Google is growing faster than this. Some quarters, Apple is even growing faster than this. So I would rather own those types of stocks, okay? If I'm going to play in the tech field, I'd rather own stocks that are faster growing and much, much more profitable than a Salesforce.com. And I'm talking about a longer term investment where I'm buying and holding it. But from a trade perspective, this one actually is setting up kind of nice, okay? And I like the way it's setting up. Now, it can get rejected here, okay? It's at a spot where it can easily be rejected. You get rejected here at 236, 235. This one comes down and it gets below kind of our channel line here. Well, look, this one's probably walking all the way back down to maybe 215. And look, it could retest the bottom of the channel, which would then be a buying opportunity, okay? Depending on how long that takes, that could be under $200 per share. Under $200 per share on this one could signal a buying opportunity and could be more of a swing trade than in this case. I think this is something that could materialize, especially the strength and the momentum we're seeing in the market. This trade here where we're buying it right at these highs, right about 238 and playing it up to 250, I think that could happen over the course of a week or so. So hopefully you guys enjoyed this video. Back again very soon with more. Good luck with your investments.